All right, let's jump right in. Today, we're looking at a really interesting investment case, one that combines a massive, countrywide economic turnaround with a very specific corporate situation. We're talking about Banco Patagonia and the core idea that it's a kind of fortress built to both withstand and profit from Argentina's comeback. So this is the big question, right? For any investor looking at Argentina, you see this potential for absolutely explosive growth, but you also know it comes with just incredible volatility. So the puzzle is there a way to tap into that upside, but do it with a serious margin of safety built in? That's what we're going to unpack. And the proposed answer here might surprise you. It's not the flashiest or the fastest growing bank. It's Banco Patagonia, or BPAT. See, the whole thesis isn't that it's the best bank, but that in a market where just staying alive is half the battle, it is the ultimate survivor. It's just built different, and that's exactly what makes it so compelling. Okay, so before we can even talk about a single bank, you have to understand the absolutely massive shift that's happening in Argentina itself. This is the macro story. Think of it as the big wave that could end up lifting all the boats. This is what we call the beta part of the investment. I mean, just look at this. It's a country undergoing a transformation at whiplash speed. Not that long ago, Argentina was in a state of constant crisis. Now, the government has taken a huge fiscal deficit and turned it into a surplus. They've absolutely crushed hyperinflation. And they've slashed interest rates. This isn't just theory. And crucially, with the recent midterm results, the whole reform plan just got a huge political green light, which de-risks the whole thing for investors. So, what does a radical economic shift like that actually mean for the banks? Well, it basically rewrites their entire playbook, almost overnight. You have to understand, for years, banks in Argentina weren't really, well, banks in the way you and I think of them. They weren't lending to people to buy cars or to businesses to expand. No, they just took in deposits and parked that cash in super high-yield government notes. It was an easy, risk-free trade. Well, that game is now over. The government doesn't need to borrow like that anymore. So now the banks are sitting on piles of cash and are being forced to actually do their job, lend to the real economy. And bam, this number says it all, an almost 90% explosion in real private sector credit. This isn't a prediction, this is already happening. We are witnessing the very, very beginning of a brand new credit cycle in Argentina, and that's the fuel for the whole sector's growth. Okay, so that was the big macro story, the rising tide. But with Banco Patagonia, there's a whole other layer, a second, totally separate reason to be looking at it. This is the alpha play. It's a special situation that's unique to this one company. Just look at this ownership chart. It tells you everything. The public, that's you and me, owns a tiny 1.15% of this company. Its destiny is controlled almost entirely by one single shareholder, the state-owned Banco do Brasil. This company's moves are not dictated by the stock market, they're dictated by the strategic goals of its parent company. Now, for years, that big owner, Banco do Brasil, was basically stuck. Thanks to capital controls, they couldn't get their profits out of Argentina. But then, in mid-2025, we had what's called the unlocking event. The government lifted those restrictions, and all of a sudden, Banco do Brasil had a clear path to take its money home. So, what did they do? Did they wait around? Nope. Their response was immediate. They turned on the cash spigot and started paying out huge, aggressive dividends every single month. This wasn't just a subtle hint. It was a giant, flashing neon sign that they are now actively pulling value out of this asset. The message this sends to the market is crystal clear. These monthly dividends are basically a for sale sign, just written in financial terms. They're telling every other potential buyer in Argentina, hey, we're taking the cash, either make a bid for the whole company or just sit back and watch the prize get smaller every single month. So we have the macro story, we have the potential buyout story. But you're probably thinking, okay, but this is still Argentina. What about the risks? This is where we get to the real heart of the safety argument. Banco Patagonia's frankly incredible balance sheet. First, just look at this number. A capitalization ratio of almost 35%. That is a massive, massive cushion of capital, way more than what's required. Think of it like a giant shock absorber. In an economy that can be as bumpy as Argentina's, this gives them an enormous buffer to handle pretty much anything that gets thrown at them. Second, the quality of what they own is just pristine. Their non-performing loan ratio, that's basically the percentage of their loans that have gone bad, is just 0.5%. That is ridiculously low. It tells you they've been incredibly careful about who they lend to. So as this new credit cycle takes off and bad loans inevitably tick up everywhere, BPAT is starting from an almost perfectly clean slate. And third, and this part is just wild, even with so few bad loans, they are massively overprepared. The bank has set aside reserves that cover more than 200% of its entire bad loan portfolio. They could cover all their current losses twice over. It is the definition of extreme financial conservatism.
So let's be totally honest here. A typical analyst might look at this and say, wow, that's a lazy or inefficient balance sheet. And you know what? In a normal, stable economy, they'd be right. But that's the whole point. In the context of Argentina, that so-called inefficiency is its single greatest strength. This bank wasn't built to be efficient. It was built to survive.
Okay, let's pull all these threads together now. You've got the macro recovery, you've got the M&A story, and you've got this fortress balance sheet. So what does that look like as an actual investment decision for you? This table really just lays it out in black and white. Let's compare BPAT to a major competitor like Banco Macro. With BPAT, you're paying a lower valuation, less than what the bank is even worth on paper, for a company that is demonstrably safer. You're getting way more capital and a loan book that's 4 times cleaner. It's the classic value proposition. Pay less, get more safety. And what's great about this setup is that it gives you 2 completely different ways to win. First, there's the beta play. The whole Argentine economy keeps getting better, the whole banking sector gets revalued higher, and BPAT just gets lifted up with the tide. Simple. Or you've got the alpha play. Banco do Brasil decides to sell its stake, which forces an immediate buyout at a premium price no matter what the rest of the market is doing. 2 shots on goal. But of course, there are huge risks. Let's be clear about that. The number one risk is that the whole macro story goes into reverse. If the economic program fails or the politics sour, this entire thesis goes out the window. There's also the chance the buyout never happens, and BPAT just stays a kind of sleepy, low-growth bank. And yeah, with such a tiny slice of the company available to the public, minority shareholders don't have a lot of say. Which really brings us to the final thought. When you're looking at a market like Argentina, maybe the key question isn't just, how do I make money from the recovery? Maybe the real question is, how do I make sure I survive the ride? In a place that's famous for boom and bust, maybe, just maybe, the biggest prize goes to the one left standing.